All right, welcome back, Fail-Safe investors. And if this is your first time to my page, this is Fail-Safe Wealth. My name is Terry. Let's get into it. So today we're going to compare two companies. I'm going to compare PayPal to Square Inc. And I'm going to give you a little bit of information about both of these companies, pretty much some facts about these companies, look at the balance sheet, how they operate, and I'm going to let you make the decision on your own of which company that you would like to invest in, or if you want to invest in them, or invest in both if you want to. I'll recommend you invest in one. But that's your decision, your money. I'm just here to give you the advice to make a fail-safe investment. If only there was some way that I can put both of these corporations in a ring and just let them battle it out. If only there was some way. Whoa, I'm back. Yes, that's what I'm talking about. So look, we don't have that much time here, so let's get into it. If you're here with me today, you're here to look at PayPal versus Square, so let's get into it. Oh, wait. I am definitely not dressed for the occasion. Give me 1 second. Oh yeah, that's more like it. If you haven't figured it out yet, anything is possible in this world. Anything is possible! Wait, 1 second. The outfit isn't complete yet. Much better. So now back to business, or finances, as I should say. Okay, assuming that you know nothing about PayPal or Square Inc., I'm just going to give you a brief description of both of these companies and how they operate and how they make revenue. So pretty much they both are digital payment companies, meaning they operate through digital payments transactions, and that's how they make their money. They charge an interest on the transaction of you making a payment, sending or receiving cash through their systems. So they have peer-to-peer transactions, and how they make money off that is if I send you money and you want that money to deposit into your bank account that same exact day or instantly, they charge you a transaction fee on that, and they charge an interest part of that. The same thing with merchant and consumer, or point of sale. They charge a percentage to the merchant for the transaction. It is usually like 2 or 3%. I think both of them charge about the same, but that's pretty much how they make money. So with everything moving into the digital age, these companies are definitely worth taking a look at for the future. These both can be future growth stocks. They also make money through small-time business loans and offering lines of credit and other ways. You'd have to do your research on these companies, but I'm just here to give you the numbers. So let's go.
And now, for your feature presentation, the great debate for the digital financial estate, we bring you, to my right, PayPal.
That's too much? Okay, I'll lose the mic. Okay, so let's get into it. So first off, PayPal weighing in with a market cap of $135 billion. That is very large market cap that company is valued at. And a trailing PE of 55. That's really good. So that could either mean that the company is overpriced or they're expected to bring in a lot of money in the future. And with a lot of analysts saying that digital payments is the way of the future, expected to make over $7 trillion by 2024, that might be a good investment. Okay, you gotta excuse me, I get carried away with the numbers. But let's get back to it. So with the earnings per share of $2.07 for last year, that's not a bad earnings per share. That's actually pretty good. And neither one of these companies pay dividends, so we're gonna overlook that because they're probably considered growth stocks, so they have room to grow. They probably want to continue to invest more in the company. That's why they don't have dividends. I don't know. Gotta look into it. But let's get back to the nitty gritty of the numbers. The balance sheet. So keeping in mind that PayPal brought in $17.7 billion in revenue last year, it's good to know that they have $10.7 billion in cash and short-term investments on hand right now. but their current total assets is 38 billion. So that is really good, especially when you factor in that their total current liabilities is only 26.9 billion. So they have enough money to pay off all of their debt right now, even if they don't make another dollar starting today. That's a good thing. So when you're looking at a balance sheet, you can't just factor in the current assets against the current liabilities, because that doesn't give you the whole entire picture, and that doesn't tell you if a company's good for the long term. So you have to look at the total assets and the total liabilities. And that's all the assets total, and the liabilities total would be everything due within this next 12 months and further out. So PayPal's current assets is 51.3 billion, and their total liabilities is 34.4 billion. So that is really, really good. Really good balance sheet. I love it. So when you're looking at a balance sheet, you also want to look at the income statement and the cash flow statement. So like I said already, PayPal brought in $17.7 billion in revenue, and their net income from that was $2.4 billion. And to get the free cash flow, you pretty much take the net income and subtract their capital expenditures, which in PayPal's case is $704 million, which isn't that much. You come out with 1.7 billion in free cash flow. So they're in a really good financial place right now. And now, a newcomer to the digital financial world. You might know them as Cash App, Square Ring. Woo, 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 woo. Alright, I was just playing. Okay, now the small fry, Square Inc. So Square Inc. weighs in at a market cap of 26 billion, which is still large, but it's not PayPal large, and a PE ratio of 81. So that's high, but that could be high because people are thinking that the earnings is going to go up or the share price is going to go up in the future. And like I've already said before, digital payments is supposed to be the way of the future. So Square Inc.'s earnings per share was 81 cents last year, which isn't bad. And like I've already said, neither one of these companies pay dividends. So let's get to it. The financial statements. Square Inc. brought in $4.7 billion in revenue last year, and out of that $4.7 billion, they retained $1.5 billion in cash and short-term investments, and their total current assets is $3.2 billion, and when you weigh that against their total current liabilities, which is 1.6, that's 2-to-1. That's a great balance sheet for total current assets to liabilities. So they can definitely weather a storm this year or within the next 12 months. Their total assets is $4.5 billion, and their total liabilities is $2.8 billion. So this is a fantastic balance sheet for a company that has room to grow. Okay, so when we look at Square Inc.'s income statement and cash flow statement, remember, like I've said, they brought in $4.7 billion in revenue, and from that $4.7 billion, they had a net income of $375 million. Remember, to get the cash flow statement, you take the net income, which is $375 million, and subtract the capital expenditures, which is $62 million in Square Inc.'s case. You're left with $313 million in free cash flow. So it's a pretty good, solid financial statement. All right, that's it. That's your time with me, and hopefully I've given you enough information to make a fail-safe investment. And God, what's happening? My head is starting to hurt. Oh no, that means it's happening again. No. Whew, man, that takes a lot out of you. Wow. Well, I hope you learned something in today's video. I hope you learned enough to go out there and make a fail-safe investment. And if you like the video, hit the like button, leave a comment down below. Hit the subscribe button if you haven't already subscribed. And you already know what I'm going to say. Let's get it, let's do it.